Hello everyone, welcome back to my channel. So this video marks the beginning of week number 22 in this Road to 200k challenge. So the week started off in a positive note, although we can see that this is clearly a typical Christmas week because the volume of the trades is below the average, what usually happens in a typical week, and prices have been a little bit on the downside at the beginning of the session, and then in the past few hours it just recovered. However, as things stands at the moment, and as you can see here on the screen, we don't have any options at this point, any positions on options. And why is that? Because at the moment, with the prices that the current stocks we have, and in the case of KQQ, in the case of the ETF, this ETF price, there are no options available among those that we are looking for. And so because of that, we at this point we simply went ahead and used the buying power that we had left, and we bought 500 more shares of Ford Motor Company. And as you can see right here, we managed to buy them at 9.77 because the price was coming down ever since the session started, because the last week Ford closed the week at a price of around 989, 990, and we because simply the first few minutes of the session the price continued to come down, and eventually it came to around the 977, 978, 979, and so this was I think a good opportunity for us to bring our cost basis even further down, although, as I mentioned in the last video, not by a very big margin. But of course, this is an opportunity that in the absence of other options we have available for us to do, this was the best decision that we could possibly make. And also, this is a bit this was a decision a little bit based also on what we can see in terms of the historical behavior of the stock, because as you can see right here, every time the stock hit around these values over here, so around the 970 somethings and 980, the price came back. And so there must be some sort of support around here, and because of that, every time the stock comes to around these values, and as you can see here, even though this is about a year ago, whether it's still valid or not, this price point, well, it's beyond my scope of understanding of technical analysis. Probably it will be, even though many things happened in the meantime. The price of the stock almost even doubled in the meantime before it came down again. But as you can see here, right around these values, it appears to be some sort of support, and so we are counting on this support to survive and not to be broken, at least permanently. And so at this time we expect, or we hope, that the stock will eventually come back. And as you can see right here, the stock average price in here, it says it's 1025. I believe it's a little bit higher than that, because we have to offset a loss from a previous option trade that we did on Ford, and we also have the transaction cost to account it for. So but nonetheless, we don't need the stock to come back to its original price around the $11 range. We need it to be much lower than that in order for us to dispose of our holdings completely. And in the same line of reasoning, as you can see right here, there are no options of the option with a strike of 10.5, which we easily above our cost basis, is not available for a 1 week option. And for 2 weeks ahead, as you can see, it's only 3 cents. And so by committing the stocks as a collateral for 2 weeks, we only get 3 cents in return. And in the meantime, we run the risk of the stock getting to the value that we want, which is around the 10.30 range, and we will not be able to sell because the stocks are being used as collateral for this particular option. So I decided not to sell any calls on this stock and see what happens, all right, the next coming days, because also we are in Christmas time, and usually by around this time of the year, the stocks usually recover and rise. And so because of that, I'm also counting on some recovery. Either this premium will improve to an extent of allow us to become worthwhile to sell some calls on this stock only on a 1 week basis, or it recovers so rapidly that it comes back to the 10.30 range, and then we just sell the stock outright and we don't even think about it anymore. When it comes to the Pfizer here, again, bear in mind that our average price is 28.50, right here. And so at this point, the option is not available, and so not for a 1 week, and for the 2 week option, it's only 1 cent. So there is no point in us selling any option on this. When it comes to the QQQ, which is at the moment by far our biggest holding, is recovering. However, it's not by a good enough margin for us to sell. And so if you look here at the options chain, and of course this is for the next day, let's just consider that this day is basically lost. We're not going to do anything, and we need to sell a call at 5:36. But even for the option for the call expiring tomorrow, we only get 1 cent in return. So we're not going to do anything. And even considering the fact that December 25th, because of Christmas, the market will be closed, the next possibility is for the option that expires at the end of Thursday, so 3 days from now. And even then, the option that we are looking for, it's only 4 cents. And so given this situation, only in order for us to commit for 3 full days our stocks of QQQ, our shares of QQQ, we only receive 4 cents. This is by far a very bad deal. We would only receive pennies in return of being committed for 3 days. And so it's a much better decision to wait a bit longer, see if the stock recovers, the ETF recovers, and then once it recovers, we then sell calls on it. For the time being, there is no sense for us to commit for such a long period of time in exchange for a very meager premium. So this is the way that we did our trades for the week. We'll have to see how the market develops tomorrow, Tuesday, and then hopefully the spirit of Christmas will lift the stocks a little bit more, so it becomes profitable for us to sell some calls on that. For the time being, yeah, this is it. Let's just input our trade of the 4 shares in our scoreboard and wrap up this video. So as you can see here, we bought 500 shares at the price of 9.77. So let's just copy this in here. So today is December the 23rd, and here let's just copy this here. So 4 buy price 977. We bought 500 shares, meaning it's equivalent to 5 contracts, and the collateral $4,885, which matches what we paid right here. And we also paid $252 in fees to do this trade, so we received no premium and we still had to pay $252. Now let's just see how much is now our cost basis. So let's go back here to this formula, and in this formula, yeah, this is where it should be. So let's open and close the new brackets, and in here let's look for the correct value, which is this one, the price, and multiply by the number of contracts or number of shares. Now you also have to add here the number of contracts of shares in order to make the average price, and we also need to account for the commission. So let's going to add also here this value over here, and so this is it, and the price came down from 10.39 to 10.30. all right, so this means that if we manage to sell our holdings, or our holding of 4 at 10.31, not 10.30 precisely, it would give us a very minor loss. But if we sell at 10.31, 10.32, it's already good enough for us. We already have a very tiny capital gain, but that's enough for us. But we'll have to wait and see if in the meantime something happens, we get more premium and we can buy more shares eventually. So yeah, this will something that we'll have to consider for the next few days, but for the time being, this is it. And again, feel free to like the video and subscribe to the channel. Any comments, any questions, you can leave in the comment section down below, and also you can DM me on LinkedIn, and we reconvene at the end of the week next Saturday to see what happened during the rest of the week, and I'll see you there. In the meantime, wish you all a Merry Christmas to you all, and to not only to you but also your loved ones. I'll see you there.